Hi, and welcome back to Soaring Profits. I'm James, and this is my friend.
Patrick, pleasure. Good to be back.
And as we've been saying in our past videos, he is the guru of market. And today he's going to delight you with all the goings and of the market. I'm sure he'll explain it better than I can, but what he's going to do is try and make you money. But what I want to say first is these are just like things he's learned. He's
Right.
not an expert. We're not saying go buy stuff. So if you go and buy and lose all your money, that's on you, man. Like you decide what you want to buy. It has nothing to do with us. But
Right.
this
With
man
that
knows
being
what he's
said,
talking about.
with
And
that
I
being
think it'll be
said,
amazing.
right. Well, thank you. With that being said, I think what we want to do here is we're talking about every day what's going on in the world, right? We're talking right now about the Ukraine. We're talking about oil shortages, gold prices, the housing industry, those sorts of things. And what we're looking at here, what we're going to be showing you and bringing you folks into this, what looks to be like a really complicated world, but it's really not. This is very simple stuff. I'm not sure if you can see this chart right now. I think we've got this set up where you guys can see it pretty well. You can see um, my scrolling here on this chart, correct?
Yes.
James, you can see that pretty easy?
Looks beautiful.
Beautiful. So this is West Texas crude oil. This affects everybody that's watching this on a daily basis. And why would it, right? This is your gas prices. Every day right now, when you're going out and filling up your car, your truck, short of your electronic vehicle or bicycle, this affects your daily life. Currently, this is a tax on the population. So what we've seen here, the charting shows all the way back the last year. Okay. So what we see here is we see an influx in pricing. This goes back to July, a consolidation in July, and then a fall. Okay. What we see here is seasonal trends. These end up kind of showing slow growth over the time. That's the way market usually works. What do we see around here? Okay. Now let's look when this is. This is December. This is the timeline in which we start, beating the war drums of Ukraine. And what do we see? Massive pullbacks, massive spikes, small pullbacks, massive run-ups. Okay. Now
What's a
we get
spike
some.
mean? What do you
Well,
mean by a spike?
so what we're going to do here is we're going to zoom in here in a second, and I'm going to show you a little bit closer of what these are. Is each one of these little symbols that we're seeing here counts as one day on the stock market. Okay. So, like what I'm trying to say here, folks, is that if you can follow the money, you can understand the way that the world works on a different level. We always feel very reactionary. Things happen to us. And when we look at the stock market and we see how charting works, we actually see that a lot of things end up working around us, right? We're much more immersed and involved in this than we think, to the point where you can almost start to predict world events, which is kind of crazy, right? So if we look back here on this chart, okay, we see at about a $62 a barrel low, okay, that's where we start to see pricing come up, okay? This is meaning that more buyers feel that this is a discount. Where did we see this again? We saw this a year earlier, right? So what we're doing is we're seeing some trends starting to pick up, right? It starts to get down into these trend lines and then they bounce, okay? So when we get into this trend line, oddly enough, we just happen to bounce off this low price. This charting area down here, this is an oscillator. This is called the RSI, which is a strength index. It's the relevant strength index, okay? So when it's at the top line of these bars, this is what is called the overbought territory. That means that purchasing has come in, they've overspent and shot prices up, and then it falls and we see an oversold territory. It's odd how these bottoms show price action bottoms and these tops show price action tops, right? See how this all starts to make sense? Now, when
So
we
the
go
line on the bottom, sorry, I'm just going to slow it down for us impaired people over here. So the line at the bottom is just judging whether or not something is sold a lot,
right,
like oversold. So at the heights, that means that at that time they sold a lot of stock.
right,
And then at the lows, that means they sold there was a lot of stock sold.
Right.
That's that
So
bottom line. It's
so yeah,
buying and selling.
exactly. So the stock market, you've got to think of it as it is just a supply and demand ledger. Okay. So
Right.
what happens is that if there's more people that are supplying it, prices go down. Right. There's just, you got too many apples. Nobody needs more apples. Price of apples go down. Right. If you have on the flip side too much demand, we'll take some stocks over the years here, like something like Tesla. Tesla was this glorious stock for a long time because everybody's like, this is the greatest thing since sliced bread. Everybody was demanding. Well, there's not enough supply. The supply stays static, right? So we get this big run up in pricing. As demand and supply start to fluctuate back down to an equilibrium, this is an oscillator. This is an oscillator that helps us to judge that. It's not perfect, but it helps us. Okay.
And then the top line is where the price range is, like exactly how much that stock was on that day.
This here is price action. Yep. So you can see here in this ledger that this is a price action move. You can see that we got up here to $130 a barrel. This is per barrel price, or in, say, another stock, it's a stock price. The oil is a commodity, right? So the world trades it slightly different than if you were buying a share of GE or Tesla or name one. One of my favorites is Palantir. I think it's a great company. I think it's got a great world of potential. But these are per share. So each corporation, each company announces a number of shares that they want to release. Oil is a little different. It's by a commodity base and it's by the barrel. Okay. So again, we saw this big run up. Everyone saw that almost $2 a liter. Okay. But what did we have here? Okay. Right around here, you can see that there's a pullback, right? So if we draw this in the price action, see this red? People were anticipating pricing leveling off. What didn't we see? What didn't we get? We didn't get that because that's at the end of January. When did we start talking about war? We were slowly talking about the Donetsk. We were talking about the area around the Ukraine that was slowly starting to be militarized by the Russians. Okay. Then this steps in, the buyers step in and push pricing up. Obviously, we're at a point here that is on our RSI as well as our price action. We are overbought. Okay. But what happens? We didn't get the pullback we expected. We ended up getting war. And like anything, the lifeblood of war is oil. Well, way up. Okay. But now we've been fearful, right? We've been talking about inflation. We've been scared that the inflationary expectations, and that's more important than actual inflation, is what are people worried about? If people believe that they're going to end up in a situation where a commodity, a good, a service, a whatever is going to be 10, 15, 20% more expensive in the long term, they buy now. Increasing demand, again, supply demand, increasing demand and driving prices even higher. So after COVID, we had what were called supply chain shortages and issues, right? Remember when we were standing in line for toilet paper? Right. That was crazy. But what we were starting to have is shortages that were coming from this. So when I go over here, you can see that we're starting to get what's called consolidation in the oil market, okay? So when we chart this, we're seeing higher highs. This side of the equation is your highs. And this side is your lows, and we're getting higher lows. So that's an upward trending market, okay? What we're starting to see now is a peak. We're seeing lower highs, okay? Lower highs and lower lows. This is a lower low, but now we're seeing a higher low. So what we're going to start to create here is what we call a bull flag, okay? So I'm not going to go right to the peak because I don't think that was a sustainable pricing. But what we're going to start to create here is this sort of pennant. Okay. And what we can do is we can actually make a measured move and a prediction of price action. Okay. So as this goes along here, and excuse me as we're learning the tech, we anticipate that we are going to come down, test, and it's going to break either up or it's going to break either down. Okay. Now in situations where we do this, we have a measured move, traditionally, the width of the break. Okay. So we are either going to see, as we get this breakout, a move back up to 130, okay, or the probabilities of a breakdown under 104, a breakdown into the traditional pricing model back down here. Okay. So what we're doing now is we're saying that you just planned out the next potential June, July, and August approximately in oil pricing by charting it.
Right.
That's pretty amazing.
And if you keep on looking at the political factors in the scheme of what people are saying is going to happen, then you can determine whether or not it's going to go down or up, depending on what's happening next in the world.
Exactly. So, and that's where we're saying here is that over these talks that we're having right now, if we look at the world in a slightly different way than we're used to, and we turn off some of the mainstream media and the media conglomerates that are telling us and feeding us their perspectives, and we fall fear, yeah, and we're able to follow the money, we can start making larger notations and larger thought processes on why things are happening in the world. And we can step away from the fear porn of just, this is how many bodies, this is the death count, this is what happened today. And we can step back and go, but why? What's happening? Where are we going from here? So another, just a very quick one here to talk about is just the overall general market. So the NASDAQ is a tech-centered market, okay? So it's going to take your companies like Tesla, like your tech-based companies, right? Your growth tech, okay? So you're seeing here right now that this has grown 2% over the last day's time, okay? So it's up 2%. But if we look back here, this has been a very volatile asset over the last year, right? So when we go back to a full year, we have this pullback, testing all of these areas, and then we called it a correction. We didn't quite get to the bottom of a crash. A stock market crash requires 20+% drop on a trading entity such as the NASDAQ, the SPY, or like the TSX or something like that. That would be a Toronto market, right? So when we see this here is that in the last, what are we, 1, 2, 3, 4, 5, 6, 7, in about 9 days, we have read the bottom, tested the bottom, and are now in a position where we are rallying back up from.
What do you mean by tested the bottom? Okay. What does that mean? So
when we go back historically, this is a value that we had back in May of 2021. Okay. This was a low in the market. We had great run up with COVID. Things were going well. Consolidation, right? Do you see this run up?
Mm-hmm.
Okay. So then we had this low in May. This is when people were starting to go like, hey, whoa. We printed trillions of dollars. We're not printing any more money. This is when stimulus had ended. Okay. All of a sudden, everyone in the States, everyone in Canada wasn't getting their checks from the government anymore. People weren't going out and spending. So the market pulled back and, okay, well, we're done with our stimulus, right? Then we started seeing the markets. Sorry, folks. So what we had here was the test. We had a retest. And then we've had a decision where the market says, okay, we feel like there's enough profitability and inflationary pressures, because inflation to stocks and assets is a good thing. It means that people go out and buy things. They feel like they have money. So they run out and they buy that car, or they buy that computer, or they take that trip. Trips are a little bit different because we had the COVID, we had the virus. I don't even know if on YouTube we can say COVID anymore. But we get this run up, okay? Again, consolidation. And then what do we have right around now? Right around the beginning of the year, we start to get massive fear again. Fear of what the Federal Reserve Bank in the United States is going to do as far as interest rates. We have fear of war in Russia. We have fear. And what does the market not like? Well, it certainly doesn't like fear, folks. Okay. So what have we seen over the last little while? The last about 10 days? What we've seen is a softening in the Ukraine-Russia conflict. They've been talking about peace talks. They've been meeting. The market goes, we've taken in anything short of nuclear war. Well, what did they do? We rallied. And what did we rally? We didn't rally just like a little one. We rallied almost 15%. Well, I imagine most of you, if you guys have any investments, your mutual funds that you have through work or directed funds from your broker, if he told you that he could get you 15% next year on your total return, you'd be thrilled. This NASDAQ got it in about 11 days, right? So again, I think this is a great start for today. I like what we do here. As we're getting the tech solved, we're trying to figure out more and more and more how to bring you excellent content with a little bit different spin on things and why maybe we look at the world the way that we do. And yeah, I think this is a great start.
Yeah. You know what? I learned a lot today, and every time I sit down and talk to you about marketing, I learn more. It was very nice to bring these charts that you show me all the time. Now they're to life, and I can understand what you're actually talking about when you talk to me. And maybe I can start making some predictions in my own portfolio, which would be nice because right now it's not doing the greatest.
Why?
Anyway,
you had all the fear and everything fell apart?
Because we had all the fear. And I'm James from Soaring Profits, and this is
Patrick. Thanks, guys. Appreciate it and look forward to seeing you again soon.
Take care. Hey, James from Soaring Profits and Pat over here. Aren't those two great looking cartoons?
Now, with that being said, folks, obviously we are not financial advisors, and we're certainly not your financial advisors. We don't know your risk tolerance. We don't know if you got money in the bank. We don't know what your situation is. So when we're having these discussions, we appreciate you tuning in. However, have some discretion. If you make $1 million with us, we're glad to have you. If you lose $1 million, that's on you as well, folks. Let's work together. Let's make some money, and we'll go from there. Thanks, guys.